How's it going, everyone? Welcome to another trade recap video. Now this is a trade that was taken just yesterday. Now this was on the 11th of May. So this was a beauty of a trade. I think one of my pretty much better trading days that I've had so far with trading in the New York session, because usually I don't. So it's one of the days where I was active during the New York session, so I decided, might as well trade and see what the market gives me. So all the trades you've seen here are trades that I've taken, and one of the last ones being a trade I did not take. So yeah, now I'm gonna give you a brief overview of the idea behind this trade, what the reasoning behind each the move was, and exactly what my thought process was. So yeah, we have a very simple could class this as a supply zone here, which did initially break structure. So as soon as I saw the mitigation there, what I did was I hopped onto the 1 minute time frame, and what we did get is we did have a mitigation. It didn't really break through, or it failed to follow through. Main reason being we did create a higher low, but we failed to break this high. So that's a good sign that there is weakness in terms of bullish momentum kicking in. So that was the first thing that I observed, right? We created a higher low, but we failed to break the previous higher high. So that's a good indication that, look, price may not be following through. So that's a good opportunity for you to enter the market or look for shorts. So what actually happened was, I'm just going to cover these two first. This were trades on the seconds. So initially I did get a reaction from this supply zone here, as many of you can see. I'm not going to mark it up again, but this is a supply zone, a very clear one. And I took an entry on the seconds time frame. If I'm not wrong, this was on the 5 seconds. So we did get a initial mitigation, right, of that 1 minute zone. What we did get is a chalk. So you have your change of character here. Now a lot of you may mark chalks, whichever way you wanted. This was a very significant or a decent swing point for me. That made sense. So this was a trade I took initially, the first short. We had our invalidation, which it's just a simple term I use to put on my charts where a demand zone gets violated, broken, not respected, whatever you want to say. So we did get quite a few decent confluences, which indicates that, look, price is gonna potentially push down. But what we did get is this zone did not even get respected. We barely saw a reaction. So we did initially get, a reaction from this region here. So you see this sell candle down. We got a reaction, failed to follow through, pushed all the way up and broke through. Now, what I did next was I looked at what did it really react to. So it popped onto the 1 minute. And what we can say is potentially it reacted to this. Essentially, you could say a sell range or a supply range, where we have our last buy candle and a push down. So for me, reacted to that. And the other thing that convinced me that this reaction was really valid and good was that the fact that we actually grabbed liquidity. So you can see how there's a lot of liquidity just resting here, because potentially, like myself, many other traders may have entered this trade as well, right? Whether they did or not, this is very, really, really clear that there is significant liquidity resting here. You've got some equals here, depending on how you mark them up. And why do I think this is a liquidity grab? Now, it's very simple, because when we pushed up and broke this range here, or this zone, we had a couple of wicks there and an immediate push down. So that's something that can help you identify what liquidity grabs are. So what actually happened was we had this candle here, very clear one, really full candle, that convinced me that since we've got a liquidity grab, we look for an invalidation, demand failing. We've got our chalk as well. A lot of things that really tell me that this trade's going to work out. So this was the trade, right? Took it just at this point, 2 pip stop, really decent, happy with it. Didn't want to look for any more confirmations and stuff like that. So this was a trade I took, put my limit there, got tagged in. And I think, out of all honesty, I mentioned this to our members as well. I actually did not know, or I wasn't aware that there was a news release during this time. And the way I figured out there was a news release was I had an alert set here So usually I would set stop loss to break even once we get a 1 minute break of structure, and that hit almost immediately. So that's when I went to my chart and I went, oh, so we have a huge major push all the way down. So I was like, okay, cool. So that's pretty decent because we had that push. So what price did, really slammed all the way down, and it did hit my TP almost. I think it barely almost touched it. The target was, let me find it, was just about somewhere, actually initially it was here, but I think I put it around somewhere below at this point where it was a valid demand zone. Almost tagged me in, but you know, didn't really hit TP almost. So what happened next was, I was still in the trade. I haven't taken profit at this point. So I saw, usually when you have big impulses from news, it takes a while to really fill the gap, fill the imbalance, or at least form a pullback. But in this case, what we saw is, this is what I just classed as an impulsive liquidity grab. Again, you've got all this liquidity resting here, right? And you've got an immediate push down and an immediate reaction back up. That's not something you see very often. So I had that, and these were all trades that was taken on the seconds. So initially what happened was, this was 30-second trade off that inside bar. We have the supply zone here. So technically speaking, if we are still going to continue with price, you should see mitigations of supply zones basically following through, right? But what happened is this violated the supply zone. And, you know, some of you may say, you know, it could have been a complex pullback. Maybe it's going all the way up. But at this point, because of how impulsive this is and the reaction back up, I was convinced that we're actually going to fill the imbalance back all the way up. So what I did was, same thing, I took the trades up. Now this is a much larger stop loss because of how you know, impulsive this is, and you can see a few of the candles have a bit of wicking. So I was happy with that stop loss, and so I took that trade. You know, we had an invalidation, a mitigation, and an immediate push off, right? And this was a really nice trade. Supply to demand, you have a supply failing, demand zone that actually caused supply to fail, or that candle, inside bar, tap, and push. Then we have another supply zone here, right? So at this point I went, okay, cool, we have the supply zone here, so this should hold, right? If it's a complex pullback, it should hold. What you see is, you see a reaction where the candle actually, the sell candle forms, and an immediate engulfing candle that tells me, look, this isn't actually gonna hold. So then again, same thing, right? Find the candle that caused the break of that supply zone and put a trade right there. Now this one was put at this region here because I thought, you know, I could minimize my stop loss a bit and it could push a bit deeper. So I had my stops just resting about this region. So, and then, you know, you get your reaction. It sort of hovered there for about a couple of seconds. Once again, you have your immediate push all the way up. And it kept going, and at this point I was asking myself, right, with this zone here, so a lot of people might be wondering, like, you know, we could look for shorts here, 100% could look for shorts, but this was a news release. This wasn't part of what the market or price action was actually following through with. So for this zone to hold up, it doesn't really make a lot of sense, because this wasn't part of market structure in a sense. That's what I would say. A lot of these news related moves, or the zones that they might create, usually don't hold up. And if anyone does not believe me, you can really go back in time, look at some backtesting results and actually see if these zones hold up. You get a reaction 100%. You get a reaction a lot of times. You get a reaction, but what happens is it fails to follow through. Again, if you're looking for shorts here, completely fine, because you could have maybe gotten a short, but if you want to look for a confirmation entry, there actually wasn't any. So you see how we pushed down, failed to follow through, pushed all the way back up again. Again, this was basically the exact same thing I did. Right, you have this candle here, inside bar. That candle was essentially the cause for the break of this supply zone. Now you might be wondering, why didn't you take this point? If you look at what actually broke the demand zone, the supply zone here, and actually broke structure impulsively, it's this candle right here, not this one. That's why the trade was taken here, not here. So then again, I had another scale in, and at this point, you know, I usually take a maximum of 3 trades at once, and I was reaching my limit, right? This is my 3rd trade, and that was basically, for me, you know, that's it. No more trades after this. So again, got tapped in, almost got taken out, right? Very close. Thankfully, it didn't get taken out. And then price basically pushed off. Let's look on the 30 seconds and the 1 minute. So they can speed things up. We have an immediate push off, right? So at this point, this is where I closed all my trades. We have a push up, right? At this point, you could say that price would continue pushing all the way up, but obviously there has to be a point where the market stops. So we had a push up, and at this point I was like, okay, cool. As soon as I saw this point, so this is a demand zone for me, right here, right? And this demand zone failed. So as soon as it broke here, I told myself, if it's going to break below, I'm going to close my trade right here. And I closed all three of them. Obviously not all three at the same point, because by the time I was closing each and every one of them, some trades closed a bit later. So this initial trade was closed just about here. These two were closed about here and here. So that's basically the NZDUSD trades I had yesterday, and they were really brilliant ones, and I quite enjoyed the session because I don't usually trade the New York session. So you know what happened next was I was just having a chat with Chris, who, as many of you know from the videos he's been making on our channel. You know, we were just having a chat about just trading stuff in general, and you know, while we were talking, we were just looking at this trade. You know, we were just talking about it, how we could have maybe improved our you know, percentage that we've gained, our profits, and also how price action moved that day. So at this point, I was just looking at the charts again, and I looked, cool, we have a change of character, and at this point you could say, look, it might just be a complex pullback, right? Everyone's going, yeah, it might be a complex pullback. But for me, I marked this up, and when, you know, this looks like, based on how price is moving, if it's going to break this point, and if you look on the line graph, right, you can clearly see how bearish it is at this point. It's not completely bearish, but the bearish order flow has really kicked in. So at this point, I went, you know what, this looks like a really potential trade, but I've taken 3 trades. I'm happy with the profits I've banked. I don't really need to take another trade. And I wasn't really intending to trade because for me, this was around close to 11, and I don't usually like to trade that late. So I just had this marked up, put a entry point here, and then I just left it and continued my chat with Chris. And what do you know, it actually followed through as well. Now, where would I set this target? A very simple target is usually the swing point for me. Now, because this swing point was created by the news, for me, technically speaking, I would expect this to be broken as well. This was a liquidity grab, but there's also a lot of liquidity resting within this. So that was where I would have set my target, and I did set it all the way down here. And obviously this trade took a while to actually run and hit the take profit target. I did not take this. I'm not going to pretend that I did, because I actually didn't. But if I did take this, this would have been a really decent trade. Really fits my plan as well. It's a very classic continuation trade that you can take. And yeah, so I think how long did it take? Let's have a quick look at how long it took from the mitigation to the take profit target. Just under about 9 hours it took to hit that point. Now, why did it take this long? Obviously, you know, this is moving towards where the volume slowly goes down. There isn't a lot of volume in the market, not a lot of people actually trading at that timings. So that's why it took so long. Now, this is what happened. It hit my take profit target, and the rest is history. So guys, this was just a really simple trade recap video. Something I'd like to do more often. I hope that you guys, you know, find some values, because this is essentially how we trade at SMT. It's not something that we're hiding, and we're not trying to convince people that there is a secret sauce, because I'm pretty sure a lot of communities out there, I hope, claim and let you guys know there is no secret sauce, because the concepts, the basis of all the concepts are the same. The only thing that differs is the execution of every trader. So yeah, that will be all for this video. Hope you enjoyed it, and I will catch you in the next one. Take care, everybody.